Hey guys, welcome back. Wanted to do a quick weekly update video. So last week we discussed how if the market followed through, right, till CPI was likely going to sell off, right? So scenario two played out in that case. And this week we have FOMC coming up, right? Another economic event that can cause a big move. So right now, this is a trend line holding a support. We have broken that support and bears do have the upper hand, right? So I'm still in this primary count where this was R12, we're falling through in a 345, right? If this is to play out, right, if the market ideally, stays below 3905 and we continue selling off, right? If I go to the chart of SPY, you'll be able to see that we have a gap to fill at 378-ish, right? So I think the third wave at minimum, right? This is wave 5 and wave 3, right? So at minimum, we probably continue selling into 378, 374 before you have, kind of a wave 4 bounce before one more leg to the downside, right? So I'm still looking to see if we're kind of in an ABC count, right? Still finishing off the B wave. Come fill this gap at 367 before we start the next leg. And alternatively, the bull case would be that, again, this would be our C wave, right? And again, at minimum, I would have, expected it to come down to 3790, right? If we continue selling off today, and this is a significant level of demand, as you can see in the past, we have gotten bottomed up. This B wave the market generally doesn't bottom on a Monday, so I don't want to say today's low could be the bottom. It could, right? But I'm looking more so if FOMC obviously comes in 75 instead of 100 and bulls get all excited, we start this, commence this leg higher. So that is something I'm looking at as well. In this case, I would again think that our way forward could be an FOMC. I mean, depending on where we kind of end the day, right? That would kind of differentiate whether, whether this 3, 4, 5 finishes before FOMC, right? Where you can go higher, or this 4 wave would be, your short FOMC pump before the next leg down. Again, these are kind of the bull versions, right? The bear version that I've shown you is we're in the 3, 4, 5, and this is a very, whether this is a wave C or whether this is a 3, 4, 5, right? That means we continue selling through the whole week, and that would kind of be the bear case. Versus in the bull case, you'll likely see temporary bounces, right, before it goes lower. And in this case, it's, gonna be pretty bullish. So yeah, I'm still primarily leaning towards, a sell-off into Monday, possible bounce into Tuesday, right, with the fifth leg lower before a reversal. And I'm also watching this, but I think this, right, and this are an equal probability. So yeah, pretty important week, right? Just kind of play it level to level. I'd say that if you are bullish, right, you would want to get over 390, right? You would ideally want to get over 390 before FOMC, right? And if you're bearish, you'd want to stay below 390 before FOMC. But yeah, with a gap, to fill at 377, I'm thinking that at minimum we're going to come down to 377. But, let's see. Ideally, again, till we break back over this trend line, right, and use it as support, I'm not going to be bullish. Till then, I'm still going to keep my guard up for a short, right? So yeah, those are all kind of the different scenarios. With that being said, let's kind of look at this week's watch list, right? So the first one I have is Netflix, and I have both the bull and bear version for Netflix, right? The reason for that, number one, is that, again, we know this is a significant supply area. Whatever news Netflix had today, again, has pushed back into that supply area. And over this, right, it's pretty much their earnings dump, right, the cost it to drop. Over that, we have this massive gap to fill, right? That's the reason, that this area, again, bigger picture, this is a trend line holding down, right? And you can see we have broken out of that trend line. So hands to the bulls, right? Good job, bulls. But you're right in the supply area till you can break over 250, right? You're not going to start filling the gap. So again, both bull and bear are equally likely, right? In the bull case, as you can see, we did break the trend line. We're holding it as support. So if we start to break over 250, then it should be easily able to run up into the gap, right? The bullish chart would be that this, again, this is your wave 3. You just had a giant wave 4 sideways. You have a wave 5 and an ABC, right? completely possible for this to play out. And also on the other hand, right, we have the case where again you're right in the supply, so kind of 250 would be your pivot and kind of the area that you have to watch out for, right? It could be very likely that, you know, again, bear stepped in here, right? So again, this is a level that bears to step in. So either direction, you can see that it's likely going to make a big move. You can wait for it to break, you know, 240. This trend line breaks around 237, but I'd say if it starts breaking below no, actually 237 would be a good one. Yeah, I think whether you're bullish or bearish, a retest of 237 before higher, if it starts to break into this trend line, right, then again, it's going to come back to the downside to test 200. Again, 250 is kind of the bullish level, right? If it holds over 250, then it should be able to run up to 280. So that's the reason I have Netflix on this week's watch list, right? I think it could make a big move in either direction. And again, the next one I have is Rivian. I don't know who sold a shit ton of shares on Friday, but I was watching the volume and I was like, whoa, right? You can see this volume candle. It's massive. Again, no one knows if it's a sell, but there's a lot of speculation that Ford dumped their position in Rivian, and it kind of makes sense, right? On the bigger picture side, you can see that Rivian has barely given up any of its gains, and if I go to the MACD, you can pretty much see the divergence, right? Even though the market kept making new highs, it's been, you know, kind of diverging sideways. So yeah, it's not a great look, right? This is on the 2-hour. If I go to the 4-hour chart, also, you can see that the MACD has crossed down. So yeah, I mean, expecting a slight retrace to 36.6. You know, I'm not, although I am looking to see if it comes much lower, has the gap to fill at 33. As if it breaks 38.2, right, I'm expecting a move to 36.6, right? A nice 4 or 5% move is not unacceptable, right? If it breaks 36.6, then it's headed down to 35, then 33, right? Again, this is the channel. It has two channels, right? The upper channel is here. The lower channel is here, right? Again, if it can break over that 39.2, 39.3 level, right, then I'd be interested for, again, you can play calls, right? You can play calls right up to 44, 45. So that would, again, make a nice move to the top of this trend line before it sells off. As long as it stays below 39.2, 39.3, I think it's going to come test some lower levels. So that's the reason I have, you know, Rivian puts on this week's watch list. The next one I have is QCOM. Again, though I have a bullish chart on this, right? I'm not, again, it's not my favorite chart, right? I do think QCOM will break this low and test a new low. But in the case that indexes do bounce, a lot of these semis like AMD, NVIDIA, QCOM, right? They kind of have some sort of bullish divergence happening. Can you see this? They have like a little bit of bullish divergence happening, you know, much more prominent on the 30-minute and 1 hour time frame. So that could cause a quick oversold bounce, right? That could make a nice move. So that's the reason I have QCOM calls, right? I have it over 126. Again, if I draw this chart, you can kind of see a falling wedge pattern, right? So if it breaks 126, I think it should be able to run up to 128, 130. So it would be a good stock to watch if the market does, you know, regain some bullish strength. Let's look at DDOG, the next one. So again, I do have a bear chart on DDOG, and the reason for that, this is the sideways channel, fake breakout, failed again, tried to break back into the wedge, failed, and now it's selling off. So that is a pretty, you know, bearish chart. And again, the next level of demand is around 83, 82. So I think a nice, you know, 6% move to the downside should be a good move to play. As long as it stays below 90, I think DDOG will, you know, come down to 83. So that's what I have for DDOG. And the last one is ZOM, right? The reason for that, you can see this is a giant channel holding as support on ZOM. And you can see we are opening below that support. So again, can first expect a retest, right? Before it sells off. But yeah, this is a channel from like 6 to 8 months, right? So that's pretty bearish that we're breaking below the channel. And if we go to the chart of oil, we also know that trendline support is around 76. So again, that's another $6 drop in oil, right? So I think ZOM, right, as long as it stays below this trend line, I think it could come down to 86. If 86 breaks, 84. So that's why I have ZOM on this week's watch list. Some people have asked me for a Bitcoin chart, right? So again, this is a level of demand, right? So if you are bearish, you would want to break below this. I'm kind of looking to see if Bitcoin has some kind of expanding flat, right? Again, this C wave could definitely end here and start a new leg higher, but I'm more of the opinion that Bitcoin could, try to break this low, right? Come to this 1.23 fib before it bounces, right? And again, if you're bearish, the chart is pretty simple, right? This would be your 1, 2, and a 3, 4, 5. So if you are bullish, right, I give you a little more room, right? I'd say even if it breaks 17, you could see some kind of reversal. Otherwise, right, if it can hold below 17, then we're definitely headed to like 14K. Same would kind of go for Ethereum. Ethereum is a lot easier, right, where this is your A, B, C. So again, Ethereum looks a lot more structurally nice, right, I would say. But again, if you're bearish, this would be your bear count. So yeah, I do give you a little more room to the downside if you're bullish, but yeah, your clock is kind of ticking. I'd say in the next 2 weeks, Ethereum and Bitcoin would kind of need that bear liquidity trap with a bounce higher. So that's kind of what I'm watching for crypto, right? Let's look at dollar. So again, dollar again is holding every channel. It breaks bigger picture, right? We've discussed how on the weekly chart it's broken out, right? This is literally 30-year downtrend, broken consolidation with a move up. So yeah, I wouldn't honestly try to short the dollar, though I'm looking to see if it has some kind of wave 3 top, but it's probably a 1, 2, 3, 4, fifth wave in progress, right? Before a wave 4 down. So this is what I have for dollar. Bigger picture, we know it's in a massive breakout, right? It's only a matter of, at what level would dollar want to cool off. It's not a good short, right? Considering this is consolidation, breakout, 20-year breakout, dollar looks very strong to continue higher. So yeah, that's bearish for equities, right? And the 10-year yield, this is the channel that we looked at on the yields, and it's still continuing to move higher, right? On the weekly chart. So yeah, again, if you're bearish, you want the channel to break, right? And if you're bullish on yields, it's likely you're not gonna little consolidation, keep pushing. But yeah, it is getting extended. So yeah, that's all I wanted to discuss for today. Again, index wise that we've discussed, right? I'm watching multiple probabilities, right? I'm again on SPY. We know that it has a gap to fill at 377. So that's primarily where I'm watching to see if the index finds any kind of support at 377. Next level of demand, again, is at 372. So again, those are the two levels I'm watching. It's kind of the minor count I have to see if we continue lower to 366, right? And if you are bullish on the market, you would ideally, again, it's made a low, it's finished its probabilities for a reversal higher. I'd say it's more likely to find, you can see it's pretty much an empty volume shelf, right? So it makes no sense to kind of reverse, which is why, I kind of showed you that it would make more sense to reverse off of these levels where it has demand. Because you can see if we head up, we're going to hit our head right against the volume shelf. But yeah, that doesn't mean it's improbable. Just means that FOMC could mark a potential reversal versus on a Monday. But yeah, let's kind of see how it works, right? In this case, I think a bump after FOMC would kind of be a fake breakout before one more low and a reversal. And in this case, it would kind of be FOMC is the reversal. So yeah, let's see how it goes. This trend line is kind of important. If you're bullish, still it breaks 3975. I wouldn't really consider any longs. So yeah, thank you. Have a great day.